If you could sit across the table from the greatest investors who ever lived and ask them one question, what would it be? Maybe you'd ask for the next winning stock. Maybe you'd ask how to become wealthy. But I think there's a better question. What do all of them understand about money that the rest of us usually miss? Today, that's exactly what we're exploring. So what are the greatest lessons from the world's greatest investors?
You know, what's fascinating is that the world's greatest investors didn't become extraordinary because they had extraordinary intelligence. They became extraordinary because they mastered something most people never do: their own psychology. Take Warren Buffett. People admire his stock picks, but I admire his patience. Imagine watching everyone around you chase the latest trend while you quietly wait for years. That isn't just investing, it's emotional discipline. Buffett once said the stock market is a device for transferring money from the impatient to the patient. That's more than financial advice. It's a lesson about human nature. Charlie Munger often reminded us to avoid stupidity instead of chasing brilliance. We live in a culture that rewards action. Investors feel they must always buy, sell, or react. But sometimes the smartest decision is to do absolutely nothing. That's incredibly difficult because our brains crave activity. We confuse movement with progress. Then there's Peter Lynch, who encouraged ordinary people to observe the businesses around them. His message wasn't know everything, it was know what you know. That's the psychology of staying within your circle of competence. Confidence built on knowledge is far more valuable than confidence built on hype. Dalio teaches another powerful lesson. Don't fall in love with your opinions. Successful investors constantly challenge their own beliefs. Most people search for information that confirms they're right. Great investors actively look for reasons they might be wrong. That single habit protects them from costly mistakes. And think about Benjamin Graham, the father of value investing. He introduced the idea of Mr. Market, an emotional business partner who offers you prices every day. Some days he's euphoric, other days he's terrified. The mistake is believing his emotions should become yours. Great investors don't let the market dictate their mood. They let the market create opportunities. Howard Marks often says that successful investing isn't about buying good things. It's about buying things well. That distinction changes everything. A great company bought at the wrong price can still become a poor investment. Wisdom isn't just knowing what to buy. It's knowing when patience is the better investment. Perhaps the greatest lesson of all is this: wealth compounds because character compounds. Every time you choose patience over panic, learning over ego, discipline over impulse, you're strengthening the mindset that creates long-term success. Money follows habits long before it follows opportunities. The greatest investors weren't trying to predict tomorrow. They were building a way of thinking that would serve them for decades. Markets will always rise and fall. Headlines will always create fear and excitement. But the investor who masters their emotions gains an advantage that no market crash can permanently take away. So if you're searching for the secret to investing, don't start by asking, what's the next big stock? Start by asking, am I becoming the kind of person who can hold on to great investments when everyone else is losing their nerve? That question has created more wealth than any stock tip ever will.
That's such a powerful perspective. The greatest investors didn't just build fortunes. They built habits, discipline, and a mindset that stood the test of time. If today's conversation changed the way you think about investing, be sure to like this video, subscribe, and share it with someone who's serious about building lasting wealth. Thanks for listening, and I'll see you in the next episode, where we'll continue exploring the psychology behind smarter investing.